Hello, good day to all. This is Kelvin here. Welcome to this latest weekly technical outlook on the major stock indices, where I'll be covering the latest trend bias, the key levels to watch on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 30 index for this coming week. Alright, before we start, let's take a look at the disclaimer slides first. Alright, before we go into the technical chart on our CMC markets platform, let's take a quick recap on last week's performance on the major stock indices across the globe. So this will be the weekly performance of 15th of Feb to 19th of Feb 2021. So as we could see, the major US stock indices ranging from the S&P 500 all the way to the small cap Russell 2000, they actually underperformed the rest of the major indices. The S&P down negative 0.7% for the week. The worst performer coming the Nasdaq 100, which actually comprises of the big US big tech stocks, negative 1.6%. The Dow Jones Industrial Average managed to almost be unchanged, positive 0.1%. And what we see is that we see stellar outperformance on the major Asia indices, the Hang Seng plus 1.6%, Hang Seng Tech 1.4%, the Nikkei 225 plus 1.7% for the week, and over in Europe, the German DAX managed to have a minor loss of negative 0.4%. And one of the reasons why we start to see this underperformance of the Nasdaq 100 is due to this rising US Treasury yield curve, or I would say that the long-dated U.S. Treasury bonds has been rising steadily since the start of this year, and this phenomena is not actually seen in U.S. but is in fact start to actually spread across the rest of the world, where global sovereign bond yields, especially the long-dated one, has started to actually inch upwards, which actually beneficial to cyclical and value-related stocks. That's why we start to see Asia starts to actually outperform against the rest of the world, given that majority of these Asia stock indices, they're actually heavily geared more on average towards cyclical and value stocks in their benchmark stock indices. So right now, let's take a look quick. Let me bring you through the CMC trading platform. So the first particular index that I like to actually monitor, if you follow me in a couple of weeks already, will be one of the growth proxy which called the semiconductor ETF, iShares PHLX semiconductor ETF, SOX in short. So what we could see, the semiconductor ETF, it actually did a strong rebound on last Friday after last 3 days of pullback. So basically what we see over here is a kind of a minor V-shaped recovery within this medium term uptrend that is in place since 28th of October 2020 low. And momentum wise, on the daily RSI is also pretty positive. Strong rebound from this corresponding resistance, which is a corresponding support, pardon me, at 56 level. Hasn't yet to hit the overbought zone yet, indicating to us that a medium term upside momentum is still intact. So what we have over here is that I will actually tighten the key medium term pivotal support on this semiconductor ETF to 413.60 to look for a further potential up move to actually test the upper boundary of this medium term ascending channel at 458 slash 465.50. Above it should see further potential upside towards 483.70 slash 494.90. So overall what we could see is a very rather positive technical configuration on this semiconductor ETF, indicating to us that global growth is still pretty much intact, which actually supports the medium term uptrend that is still ongoing on the major stock indices. Now let's take a look at the SPX 500. Okay, so let's start with the daily chart first. All right, so on the daily chart, what we could see over here is that there's still no clear signs of a bearish exhaustion in the medium term, or a advocating for a bearish reversal at this point in time. All right, at least in the medium term. So what we could see over here is that it's still kind of being supported by this okay, one second, let me highlight to you all. Okay, so it's still within this major ascending channel that is in place since 23rd of March 2020 low. And what we could see right now is that is since the bullish breakout of this former major expanding wedge resistance now turns to kind of a pullback support where it was actually tested on 1st of Feb this year at around 3640 level. Now there's a pullback support, and it starts to actually inch higher from here within the last 20 close to the last 20 trading days. So what we could see over here is that currently is being supported by this rising 50-day moving average, which is coming to act as a support at around this 3800 level. Okay, so this 3800 level right now also correspond very closely to this major ascending channel support that I drawn on from the low of 23rd of March 2020 right now. So the current pullback is right now testing this former pullback resistance, now turns into a pullback support level at for the RSI, which is at this 55 level mark from here. So definitely 3800 level will be our key medium term support to watch for this week. So pretty much unchanged from last week trend buyers as well as the key levels to watch. So looking at this 3800 level will be my key medium term pivotal support level. For our RSI is now trying to shape a higher low, okay, which indicate to us that short-term momentum has starts to actually creep back into this SPX 500 level. So still pretty much unchanged on my strategy for this coming week, using 3800 level as my medium-term pivotal support level, looking for a further potential up move to actually retest this 39,600, pardon me, 39,600 slash 39,990, which was actually tested last week, which is our kind of a first potential upside target. Breaking above 39,990 should take us much higher towards the next resistance at 4080 slash 4100 level on the SPX 500. Now moving on to the next major US stock indices that we cover will be on the Nasdaq 100. Okay, so the Nasdaq 100, as I mentioned earlier, is the underperformer due to its negative correlation, more sensitive towards this rising yield curve, as its top 5 percentage is actually here skewed towards the US big tech stocks such as Apple, Amazon, Microsoft, Facebook, and Netflix. Okay, so what we could see over here is after hitting this high, which is our first upside target and resistance at this 13,875 last week, the start of last week, which is 15th of Feb, it starts to shape this 3 to 4 days of pullback. So this pullback itself over here is that in terms of technical configuration on the daily chart, it still has a clear signal of a medium-term bearish reversal. So more or less, I would say that in terms of probability, is still actually evolving in a pullback within this medium-term uptrend that is in place since the low of 10th of November, after doing this bullish breakout from this multi-month sideways configuration that was previously in place from 2nd of September all the way to 25th of November last year. So, and also if you look at the 50-day moving average, is still rising, now coming to act as support at this 13,190, which also correspond to this medium-term ascending channel support. Let me highlight to you again. Oops. Okay, that is coming to support as well as 13,190. RSI still holding above the 50 level mark, and as well as this corresponding major ascending channel, which is in place since 27th of Feb last year, also coming to as support at the 50 level mark as well. So for the strategy chart, actually tidy a bit on the medium term pivotal support to 13,190. As long as this level holds 13,190, we do expect another leg of potential up move to actually target the next resistance at 14,100 slash 190. Breaking above should open up scope towards 14,360 slash 14,435 on the Nasdaq 100. Okay, now moving on to the outperformer in Asia. which is the Hong Kong 50 index. So for Hong Kong index, is that after its Chinese New Year break last week, it managed to break above or gap up this minor or former swing high area of 21st of Jan to 23rd of Jan. Now turns into a pullback support at 13,060 level. RSI on the 4 hours still holding above the 50 level mark, indicating to us that short-term momentum is still intact for this Hong Kong 50 index. So what I do is that I actually tighten the key medium-term pivotal support to this 29,350. So what's 29,350? 29,350 is in fact this medium-term ascending trend line support that is in place since 23rd of December 2020 low. And if I could do a Fibonacci retracement for you all, it actually retraced the entire 25th of September 2020 low. Okay, pardon me. Okay, let me use the Fibonacci retracement. Okay, taking from 25th of September 2020 low all the way to last week high. You see it corresponds to the 23.6% as well. And also if I were to do it at a lower time frame fractals, taking from the low of 29 of Jan 2020 low. So if I were to, okay, let me highlight to you. Oops, sorry. Okay, let me do a proper one. Okay, from here you could see it's actually correspond to the 61.8%. So we have a combination of fractals retracement 61.8%, or from a lower time scale at 29 of Jan 21, from a higher time scale which at 25th of Sep 2020 low 23.6%, all confluencing at this 29,000 level, 350 level, which is all with the confluence with this graphical support of this ascending trendline support from 23rd of September 2020 low. So with that, we actually tightened the key medium-term pivotal support for this week to 29,350, looking for a further push up towards 31,600. Then thereafter, a break above it should take us higher to 32,300 slash 32,470 on this Hong Kong 50 index. All right, so still momentum still pretty positive on this Hong Kong 50, and the trend bias remains bullish for now as long as this 29,350 key medium term pivotal support holds. Okay, now moving on to the Nikkei 225, also one of the outperformer last week among the major indices that we cover. Okay, let's give it a bit of time to actually load the chart. Okay, let's start with the daily chart of the Nikkei 225, or the Japan 225, pardon me, first. So as we could see, the Japan 225, what we could see over here is that it's still trading within this major uptrend phase in place since 16th of March 2020 low. On the medium term, since this strong rebound from 1st of Feb 2021, that is 20 days ago, it's still being supported by this rising 20-day moving average as well as the 50-day moving average. So what we could see over here is that daily RSI still shaping higher low, higher high. Right now it's coming very close, hovering at the overbought level, but at this overbought level it hasn't hit a kind of an extreme level that was seen previously on the latest one of 9th of November, which is at 82 level. No bearish divergence signal as well on the RSI, indicating to us that this medium term upside momentum is still intact. Price action wise is from last week high of 30,716. Okay, it actually did 3 days of pullback. So this pullback itself, in terms of candlestick pattern, let me zoom into your, there is no clear sign of a what you call bearish reversal candle. And in fact, last Friday it actually ended with this kind of a bullish hammer pattern, which is very close to this former swing high area or minor swing high area before this short-term pushback up. this way call it a kind of a short-term push up, which indicate to us that there are more bullish buyers coming into the price action to actually support last Friday initial sell off. So all in all, if you look at price action, if you look at moving averages, if you look at momentum indicator on the daily RSI, it's still telling us that the medium term uptrend from the low of 1st of Feb 2021 low is still intact. So with that, I will actually maintain my bullish bias that we have for last week, spilling over to this week with the key medium term. Okay, pardon me. Oops. Okay, give me a minute. Okay, all right. Sorry about that. So with that in mind, I will actually maintain the key I'll maintain the medium-term bullish bias with the key medium-term pivotal support at 28,900 level. As long as this level holds, we still expect a further potential up move to actually retest 30,750, which was our first resistance or target that we have last week. So last week high was 30,716. A break above this level should take us up higher towards 31,350 in first step, followed by 32,000. 150 32,250 level. Daily 4-hour RSI still holding above the 50 level mark, shaping a series of higher low, indicating to us that the short-term upside momentum is still intact as well. Okay, now the last index that I want to share for you all will be in Europe, will be the German 30. So let me expand the German 30 index for yours, starting with the daily chart first. So if you look at the German 30, the whole of last week it was actually trading in a sideways range. Since in fact since 8th of Feb high, which is at this 14,190, it's been trading sideways. uh First line of support at 13,700, then definitely we start to see this pullback resistance, or resistance turns into a pullback support at 13,300 level slash 13,050 level, which is so confluence with the ascending channel support of this major uptrend that is in place since 19th of March 2020 low. Daily RSI still holding above the 50 level mark, showing some positive or some encouraging sign in terms of medium term upside momentum. Okay, so no change in our strategy for the weekly. On the 4-hour chart, still using that 13,700 level as my key medium term pivotal support for the week, looking for a push up to actually complete this kind of a minor consolidation, configuration to target this 14,350 level. Okay, okay, this is the 4-hour chart. Let me zoom in it again. Okay, 14,315 level. A break above this 14,350 should take us higher towards 14,620 slash 730 level. Okay, so all in all, what we could see over here is that the major indices that I share with you, the uptrend still remains intact. The medium term uptrend remains intact. So what we could see, the price action last week is more of a minor corrective decline or sideways movement, depending on which index that you see. Let's say the German 30 index, it will be more sideways. The one that is underperforming last week will be the Nasdaq 100, because due to its big tech, we call it big tech concentration, that is being kind of a has a direct direct correlation movement with this rising bond yield that is taking shape globally. So I do expect that the Nasdaq 100 will to continue to underperform, pardon me, underperform against the rest of the major indices, but it's still not shaping that kind of bearish reversal movement yet, at least in the medium term. So the medium term uptrend is still intact. Expect a bit that it actually potentially start to actually grind up higher at a slower pace compared to the rest of the major indices that I share with you all in this week video. So with that, have a great trading week ahead, and I see you all next in my next video.